Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, December 21st, a mixed day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn continuing its losses of 3 cents on the day, losing 3, closing at 347, just below the 50-day moving average at 350. And beans hovering right around the close on the 100-day moving average, gaining 2.25 cents, although it was up as much as 5 cents at one time, but couldn't really hold on to those gains. And wheat in Chicago closing right around the even $4 mark, losing 3 on the day. Today just really sort of felt like a consolidation day, a lot of lackluster trading as we get closer to the holiday, and trading volume and activity will certainly probably be limited. There was very little news to talk about. We did have some USDA news. They announced a 132,000 metric ton deal to China. There was also some news that Taiwan bought some U.S. wheat for milling purposes, but other than that, it was really just continuing to look at the weather forecast in Argentina, which shows continued improvement in moisture outlook. The 5-day forecast shows 80% coverage. Even the 11-day forecast had an uptick in moisture in the latest model run. So overall, there's very little that the market is looking at to get it concerned about moving prices higher. Keep in mind, we have a large position held by funds in soybeans right now, going long in beans right now. Going into the holiday, I think that could be kind of risky. If the weather continues to be favorable and continues to look positive, I wouldn't be surprised to see some downside potential here. With those longs heavily long right now, they could certainly start to move the market in a holiday season that is going to see limited commercial trading. On other news, we did get EIA's ethanol numbers out. These were a slight deviation from last week. We saw just a minor downtick in production to 1.036 million barrels a day versus 1.04, and stocks of ethanol were down as well. When we look at how we've fared so far this year, we've been doing fairly well, certainly in comparison to last year, and certainly in regards to the pace we need to reach USDA's forecast for the year. What you can see in green, we're well above last year's level in black, and the red line is basically projecting out the weekly numbers we would need to reach USDA's forecast for the year. And what you can see is, we're well above that pace line. Now, keep in mind, there's still a lot of marketing year left, but I wouldn't be surprised to see USDA maybe in their January report give a bump to ethanol demand or corn use for ethanol by maybe 25 million bushels in light of this. But keep in mind that 2017 is probably going to be problematic, and I'm going to put together some things that I've been hitting on here in Grain TV in the last few weeks, but I really want to drive it home as we go into the end of the year for those farmers sitting on the sidelines trying to figure out what to do. There's a number of factors that are shaping up to be fairly negative against the grain markets as we move into 2017. Obviously, everyone's got their focus on South America. Right now, Brazil looks really good. Keep in mind that's 2/3 of the bean production down there is Brazil. So we already know they are doing very well. Argentina has been sort of the wild card the last month. They have been dry, but that is starting to turn quickly to a better situation as the rain started on the weekends and continues to go through the end of the month this month. So that overall is looking very bearish for prices. On top of that, as we enter this holiday break period and this amount of low volume trading, we do have funds sitting heavily long in soybeans. That could be problematic if they decide to hit the road, ditch those long positions in a period of very light volume. Then it could really lead to sharply lower prices in the new year. Other things going on, we've seen farmers really holding tight to corn after harvest. They were more eager to get rid of their impressive bean crop, and with beans rallying sharply after harvest, farmers were easily turned to selling beans and holding on to corn. That's going to have to change pretty soon. I think bankers and cash flow considerations as we enter into the new year are going to force farmers to make some tough decisions. So farmer selling, I suspect, will probably heat up as we get into the new year. Also, on the corn balance sheet, I still disagree with USDA. They have a huge increase in feed demand for corn, 10% year-on-year change. When you look at our livestock sector, only 2 to 4%. When you go across all the livestock, dairy, poultry, categories. You don't see anything that high. In addition, we've got ample competition from milo, we've got ample competition from DDGs, soy meal, all these feedstuffs that are widely available and widely in big supplies, I think is going to limit the potential for corn demand to be the 10% higher mark that USDA has pegged. Wheat competition, we've talked about this as well. Argentina and Australia are now finishing up their harvest for the southern hemisphere. They are going to be marketing aggressively. We saw Argentina yesterday garner some of that Egyptian deal. With the U.S. dollar being as strong as it is and continuing to move higher, that just really bodes negatively for U.S. wheat. We just are sort of a price follower in the wheat market versus corn and beans, where we can have more of a leadership role. So when the U.S. dollar strengthens, it really weighs heavily on U.S. wheat prices. Looking ahead to 2017, everyone's been talking about how many more acres we're going to have in soybeans. If you look at the numbers, 5 million more acres, which is what most people are thinking is a very realistic possibility. Getting as high as 90 million acres is even possible by some analyst projections. That puts our ending stocks from 470 this year to up over 700 million bushels next year. If you add that to a potential record large South American crop, I see really low prices coming in 2017. So if you're a producer, by all means, I think it's time to start, paying attention and start doing something in the marketplace. It may be difficult to fathom that we can get worse, but I think it's certainly in the possibilities given some of the negative factors we have. As always at Grain Hedge, we're here to help and here to help you in your own marketing situation. So by all means, visit us online. That's all we're going to have for this year. We're going to wrap it up and go on holiday break, and we'll see you in 2017. Have a great holiday.